Hey folks, I'm Dan Frio, the rate update, and today is January 12th, 2021. You're gonna like today's news, so don't go away. Okay, we had a reversal. Finally, the MBS market, and that's why you guys follow me, is getting crushed. Why? That's what we're going to go over here in a second. So let's get on to what's going on today right now, and then I'm going to show you kind of some interesting things as I keep digging down this tunnel. So let's see what's going on with rates. The mortgage-backed security market, that's why you're here, is up 5. Why am I so giddy? Well, let me show you. If you've watched my channel every day, you're going to know why. We had a complete clobbering in the market since last week. And so let me go over and explain to you what you're looking at. This right here is what's called the mortgage-backed security market. This is a bond that trades on Wall Street that determines, or it's the biggest component when it comes to mortgage rates, other than when there's another piece of the segment of mortgage rates, and they're called loan level price adjustments. I have several videos on those, so I'm not going to go over those. But let's get back to what's going on here. This is the bond that trades on Wall Street that people buy as investments. And this is what's going on with the price. And so let me explain to you how this works. As the price goes down, let me make it in the most common sense I can explain it to you. That means you're paying less for the bond. So the analogy I do is, bear with me for those that watch every day. I want to make this simple for everybody. A bond that matures next year, it's worth $100 on maturity. The lower you pay for it today, the higher the rate of return. Here's the math. If I pay $50 today, and next year it's worth 100, I doubled my money. So my rate of return on that is 100%. So the rate is 100%. The extreme flip-flop of that is, let's say I pay $100 for that bond today. On maturity next year, it comes back and I get my $100 back. I paid 100, I received 100. What's my yield or rate of return? You got it, 0. So you see how the more the price goes up, the lower the yield, lower the price, the higher the yield. So what happened here in the last 5, 6, 7 trading days, we got killed, okay? So there's a lot of things that I follow on this, and I'll dig through this very quickly. There's technicals. When you're charting, we follow Fibonacci levels. And these are basically ceilings and floors that are put in place at different variations of the trading. Okay, so let me make it make sense. The Fibonacci levels were, here was the top end and here was the bottom. So there's a ceiling and a floor. Think of it as you're a kid playing bumper, bowling. And you bounce the ball and you throw it down the lane and it bounces around and it stays in that lane. That's normally what happens in trading. But when we started a decline, if you go back to my video last Tuesday, I said right here starting to concern me because we keep hitting this top tier of the Fibonacci level and we're not breaking it. At the same time as other debacles took place in Washington and all over the place. Since that time, we had a bloodbath in this market. I don't mean that all over the world, but so sorry about that. So we basically had a huge deterioration in the markets. But these other lines right here, there's a line here, there's a line here, and there's a line here. These are what we follow as well as for technicals, and they give us moving averages. The top one is a 25-day moving average, the middle one is a 50-day, and the bottom one is a 100-day. So if you blend out all these numbers, this is where we would be averaging over that duration of time. So usually the 25-day moving average is will create resistance. And so we were expecting, well, if we have a pullback, we have a resistance level right here. Well, day one on the pullback, we kind of teetered at that, but we didn't hit it. And I was like, okay, that's good news, because we thought it would then tighten up the trading range and trade within here. But the next day we opened up and we opened the market below that 25-day moving average and blew through the 50-day moving average. Then that's when it's like, uh-oh, what's our next line, or what's our next resistance level? Well, that would be the 100-day moving average. And then we went through that and we stopped there, which was like, whew, okay, that must be the next resistance level. and then that one seized, and we just crashed from there. So we created a new technical down here at the 102.497 range. Okay, that's right here. That created a new technical bottom, Fibonacci bottom. We hit that briefly, and then we came off of that. The nice thing is now we're starting to come back. Okay, so what this all means is I think rates are going to stabilize right here. There was knee-jerk reactions in DC, as well as Wall Street, as well as with the Fed and everything else that's going on. And I'm going to give you some of those numbers here. Where do I expect us to be? I expect us to be right in this range right here. So we have some bringing back to do, or rates. I'm expecting rates to continue to drop some. And this is a pretty big move that I'm expecting. And I think we're going to get there over the next week, because I think cooler heads are going to prevail. So what that means is we're going to be in the range back in the high 2s on the 30-year fixed. Okay, so now the intraday chart. This is interesting because you could see right here, I'm going to go the whole day. We came out of the gate okay, and then we crashed. And then there was a bond auction today, and that actually did very well for the bond market. So we had a great bond auction where there was a lot of buying there. The employment calendar, or the economic calendar for today, really the only thing that came out today was the JOLT numbers. JOLT is, I'll explain this to you, is how many jobs are open in the economy right now. They expect. Now we start looking at some of the technicals behind the scenes, and this is some stuff I'm going to start adding to it. Okay, and the reason why I'm adding the dollar, I'm going to show you the dollar and what's happening in the bond market, as well as a couple other things, because what we're also starting to talk about on the channel is stocks, bonds, other investments like cryptocurrency and such. This is going to give us an idea of what's going on, throughout the world and with our direct economy. You're seeing the dollar index is down 0.437. This is actually good news for like cryptocurrency, Bitcoin. You're going to see probably Bitcoin rally today. I'm not going to post this chart because the main purpose you're here for is what's going on with mortgage rates. But the dollar is weakening, and that's expected with the Democratic Party, taking control of basically all aspects of the government. They're anticipating more relief, thus more borrowing from the government to be able to provide that relief, and that's going to eventually cause inflation down the road, but that also devalues the dollar, and that's why a lot of people are starting to go into altcoins. You can see the 2-year Treasury, it's rallied. You can see it rallied from January 3rd and basically all the way up to now. We've had a pretty good rally in that. And that is what's causing a lot of pressure in mortgage rates, okay? The next thing that we're watching right now is I'm watching so I can inform you guys, I'm trying to stay ahead of the game. What's going on with mortgage delinquencies? Because that's going to play a role in all of this. And right now it's not, it's the headlines show terrible. They compare it to October of 2019. They're like, the numbers are triple where they were. Yeah, but back in 19, we didn't have the pandemic, and we didn't have the CARE Act and all the other stuff. So I'm anticipating between the stimulus bills and everything else that the government is doing to help, plus the vaccine coming out, that we're going to have a soft landing and then a V-shaped recovery come spring, summer. Because the good news is right now we don't see flu numbers up. If the anticipation was, the corona on top of the flu on top of everything else, there was going to be disastrous. But there is a light at the end of the tunnel, folks. So what we're doing right now too is I go over the market index rates. You're going to see, as like I said yesterday, rates are going up. They're not going up huge. And I'm going to show that's represented in this number right here. You can see a year ago, January of 2020, rates were still in the 4 range. We're coming down, we're off of our bottoms. There was the bottom, but it's not so bad. It's still really low, and we still haven't come up to the 3% range, as you can see right here. What's represented down here, and with all these numbers here, is 30-year rates for the conforming loans, jumbos, FHA, and VA. So this is the average out there. There's going to be adjustments to this number. Those are loan level price adjustments plus some other things. But this is what the average rate is out there. It's 2 basis points higher than we were yesterday, and 7 basis points higher than we were a week ago, or 9 basis points higher. So let me explain this 1 day delta. What does that mean? A delta is a change. So this is a 1 day change. 2 basis points is 0.02. So if you have a rate at 1, if you added 2 basis points to that, it would be 1.02. Not a big change. These are big changes. You can see almost across the board, we're almost 100 basis points, which is 1 full percent lower than we were last year. So that's my rate update for today. If you're like, Dan, I like what you're doing, I like what you're seeing, I really want to jump on this and get it done, because I highly suggest you do that. Put in your application. Let's see for a dip back in rates. When we get that dip, I'll lock you. You could be done. You don't have to worry about it anymore. Don't procrastinate and don't try to hit the bottom, because you won't do it. How do you reach out to us, and how do you get some help from us? Well, the best way to do that is go to therateupdate.com. And it's going to take you to my website. Down at the bottom here is our 800 number. That is probably the easiest and fastest way to get us. I promise you, we don't bite, and it is not hard pressure sales. I teach a technique here. I do not want high pressure sales. I want for us to be able to answer your questions, review any paperwork you have, answer all the questions you have, and advise you what we can or cannot do. Then leave it up to you to decide. We're not going to call you every day and pound you saying, hey, this offer ends today at noon or whatever. We're going to leave it in your lap, and you decide what the perfect timing is for you. But the best way to get us is 844-775-LOAN. That's 844-775-5626. What I ask a lot of people to do, and I do this on a daily basis, if you're in the mortgage process right now of building, buying, refinancing, doing anything, and you're not locked in, or even if you are locked in, get a second opinion. If you had an ailment, if you had cancer, if you had something major in your life, your home is major. You're talking an indebtedness of $200,000-$500,000. That's a big piece of your life. Get a second opinion. Please, that's all I ask of you. So if you're in the process right now, you would have received a loan estimate from your current lender. Send that over to us. Let us review it and come back to you and say, okay, let's beat this. Let's be competitive, and let's help you out. Let's get you a lower rate. Let's get you lower fees. In most cases, we can do that. Some cases we cannot. Some quotes I'm getting back right now, I hate to say it, is they just seem very unrealistic. I had one the other day. It was like a 2.3 30-year fixed rate with like no fees, and it's like you guys telling me that there's gas down the street from your home for 50 cents a gallon. There's probably something behind that, but maybe not. So here's what, if you can send that loan estimate to me, or if you haven't done anything yet and your rate's in the high 3s or higher, please look at doing something. If you're in a forbearance, please call us and let us advise you the best alternative or ways to get yourself current, because some of the alternatives that the bank are offering you are bad alternatives. The best way to get me this information is email it to me. And my email address is pretty simple. My name is Dan Frio. My email address is d4danfrio@preferredrate.com. Or when you're on the web, if you're like, hey, I just want to get the ball rolling, if you're looking to buy a house, this is what we call a funnel. It's a questionnaire that you go through and you answer some questions. Based on the information you provide, it guides me as well as guides you through the perfect program for you. I also review all these to make sure we're picking the perfect program. If you're looking in the refinance, this is the tab here. It does the same thing. If you're just like, I just want to apply and get the ball rolling, you can hit the apply now button right here, or get a free quote down here. This tab right here, this is a really cool tab we added about a month ago. If you want to find out the value of your home, this is the #1 tool in the market. It is free for you to use. I pay the subscription and you piggyback off of my subscription. It is fantastic. And it'll give you even things about your house and your finances that will blow your mind, because they're like, how do they know when I got my mortgage? How do they know what the balance is? All this data is pulled from public records, and you'd be surprised on how much information is there. So that is it for today. One last thing, if you could do me a big favor. I need help with the YouTube analytics and algorithms. So give me a thumbs up if you like the videos. Subscribe down below. Hit the bell so every time I do post a video, you get an alert and you can watch it. We got some crazy things coming up. We have a whole new revision of videos that we're going to start to do on a weekly basis. That starts next week. And it's going to be a wealth management, we're going to try to do, what's the best way to say this? Money education. Teaching you stocks, bonds, investments, insurances, retirement plans, and real estate. So hopefully you like what you see. Subscribe, become a member of the team, and take it from there. So God bless. Thanks for watching. See you tomorrow, same time, same place. Bye-bye.